morning, good afternoon, good evening, wherever you may be. It's great to have you with us. My name is Matthew Reisman. I'm a director of privacy and data policy at the Center for Information Policy Leadership in our Washington, D.C. office. Many of you attending are old friends of CIPL, but for some, it may be new to you. Our organization is a think and do tank, as we like to say, focused on fostering solutions for responsible and beneficial use of data for technology, for services, for any way that data can make a difference in the world. We take pride in bringing together a variety of stakeholders, our member organizations, regulators and policymakers from around the world, and other thought leaders to come together to find these solutions. And that's definitely the spirit of the event we have today. If you find today's event interesting and you'd like to learn more about CIPL, please don't hesitate to reach out to me. My email is reisman@hunton.com. Malachi, if you could put that in the chat, I'd be grateful. And we have some other events coming up very soon. We'll be getting together in Ottawa with a number of our friends and regulators. And if you'll be in town next week, we would love to see you. Please let us know. And we also have a schedule of events coming up on our website on privacy, on AI policy, on the EU AI Act, and other topics. Hope to have you with us soon. Vivian, thank you so much, and over to you.
Thank you very much, Matthew, and thank you to everyone who's joined today. Welcome to our CIPL webinar. Today we're looking at regulatory coherence, how privacy and financial services can work in practice. Work and work together, I think, is the operative term. So my role is as a senior data privacy policy and strategy advisor to CIPL, the Center for Information Policy Leadership. Prior to my portfolio career, I've worked in a number of financial services firms, and I've always been a member of CIPL because of the fascinating thought leadership work that they do. It's both insightful and practical at the same time. So I'm delighted to have the opportunity to host this webinar today with an outstanding group of speakers. So let me introduce firstly who our speakers are, and then I'll introduce the topic, and then we'll get going. So firstly, we have Alexander White, who is the Privacy Commissioner for the Office of the Privacy Commissioner for Bermuda. So hi, Alex. Fantastic. We also have Laurie Baker, who is Vice President, Data Protection and Regulatory Compliance for the Dubai International Financial Center, or DIFC, as we like to say for short. Hi, Laurie.
Hello, everyone. Thanks, Vivian. Hi.
Fantastic. We have Stephen Almond, who is the Executive Director of Regulatory Risk at the UK Information Commissioner's Office, or ICO for short. Hi, Stephen.
Hello.
And then we're delighted to also welcome today Ed Smith, who's a director, part of the Digital Regulation Cooperation Forum, but at the UK Financial Conduct Authority, or FCA, as we like to refer to it. Hi, Ed, and thank you very much for joining us today.
Hi, everyone.
Fantastic. So for today, what we're going to be looking at is that regulatory cooperation. As privacy practitioners, we're fully aware of the obligations to balance what might seem or feel to be competing regulatory obligations. And the tension has never been greater, perhaps in the context of financial services, particularly when we're thinking about financial crime, AML, money laundering obligations, and others. So there is that potential of, on the one hand, the financial services regulators are asking us to better understand our clients, to learn more about our clients, to safeguard against financial crime, to be much more proactive in terms of understanding our clients so we can identify if there's a vulnerability or a need or a fraud taking place. And so understanding our clients better enables financial institutions to serve them better, but also to manage any potential risks in relation to those relationships as well. And on the other side, we have data protection legislation, which has evolved very, very rapidly over the last 20 years. And there we have principles of data minimization. Really important that we only process such information as is necessary, that we keep it secure, that we keep it confidential, that we don't share it unnecessarily, that we're proportionate and reasonable in the way in which we use that data. And for a long time, I think we've had a situation where there's been a lack of understanding of how we bring those two approaches together, one of which is to know your customer better, to be preemptive and intuitive about your customer needs and your responsibilities toward them. And the other one, which is to safeguard data, which is actually, let's not get excessive here. What we really need to do is to respect both the confidentiality and privacy of that data as appropriate, and to make sure that we're handling it in a way which is not exposing the data to any potential risk. And so what we're going to discuss today is actually the progress that a number of jurisdictions have been making in closing that gap and actually giving us some real tangible examples of how both financial and privacy regulators can work together collaboratively, there I finally got that out, collaboratively, to actually navigate a way forward which gives financial institutions certainty. Because I come from the financial crime space, and one of the biggest challenges, which is often raised in relation to how do I comply with my financial crime obligations, is, oh, but how do I balance all privacy as well as my financial crime obligations when one wants a lot of data and the other one doesn't want a whole lot of data? Does either one take precedence? And the reality is they don't take precedence. There isn't a case of one takes precedence over the other. One can set out obligations, and certainly from a privacy perspective, it's very much about how we process the data. So financial services sets out what are the obligations or what data we need to process, and privacy tells us how to do that. And so what we have is some excellent examples of jurisdictions where that approach has been successfully navigated in relation to different areas of both financial and privacy compliance, as the case may be. So to help us explore what can that look like in practice, we've gathered together an amazing group of regulators, and we're going to have a chat to each of them about what they've done in their jurisdiction, what lessons we can learn, and what were some of the challenges that they overcame, but also how that's working now. So Alex, I'm going to start with you in relation to Bermuda. So in Bermuda, you recently launched your privacy legislation that became into effect on the 1st of January of this year. But in anticipation of that legislation, you set about spending a fair old amount of time getting to better know both your financial services regulator, because Bermuda, the financial services sector, is the largest component of your economy, and also to understand what the businesses in that jurisdiction were thinking about the privacy legislation that came into effect. So new legislation in Bermuda, an existing and well-established financial services sector, a clear understanding of what the obligations are in relation to the financial services sector. And then with this new legislation coming into play, you reached out to not only industry bodies and regulators, but also to individual firms to better understand what they thought the issues might be in relation to the published draft of the privacy legislation that came into effect earlier this year. Could you just tell us a little bit about that journey, why you started on that journey of consultation? I think it was 18 months before the actual legislation came into effect, what you discovered en route, and where that actually took you.
Yeah, thank you, Vivian. I'm really happy to do that. And thank you to the entire SIPL team for having us and for organizing this event. So yes, our legislation came into effect January 1st. It is a comprehensive style of privacy legislation, meaning it would be, to use shorthand, largely aligned with the GDPR or Canadian type of legislation, in that it applies to all organizations that are processing personal information, that are using personal information as part of a structured filing system. And as you mentioned, Bermuda has a well-established financial services industry. And in fact, the industry in particular here is insurance and reinsurance. And so just to give you some examples of how big and how much of an impact this industry has, the estimate is that about 1/3 of all insurance money in the world goes through Bermuda at some point in time. And so it's hugely impactful in this, and because the industries, the entities in Bermuda relate to reinsurance or insurance for insurance, that means that there's kind of a cascade effect where when there is a large event that affects, for example, a hurricane hitting a large area, wiping out a lot of individual homes, some money has to come into play to rebuild. And so there's these cascade effects that can happen. And so it's especially important for us to say that privacy is not going to prevent this sort of integrity of the financial services system. So these entities are also highly regulated, like you said, and in my opinion, it's the goal of, or it should be the goal of data protection authorities to be proactive, to be engaging with the public, and basically not sit back and say, you go figure it out. So, for example, you talked about the question of necessity. So, of course, we have data minimization, but these organizations are also being asked to collect the information in order to use it for financial services compliance reasons. And in my opinion, it's just not fair for us to sit back and say, okay, you can go try to guess what compliance looks like. I think it's really important for us to be part of the process and to put a marker down and to say, here's what we think is a reasonable manner of behaving for those regulated entities. And so in order to do that, we wanted to reach out to the community well in advance of the law coming into effect and say, what are the industry-specific concerns that you see, that you, the industry, see could be a factor in terms of data protection compliance? How could this interfere with your operations? What sort of guidance or clarity would be useful in order so that you could point to that and say, okay, here's how we're supposed to do it. And of course, we wanted to engage with our local financial services regulators here in Bermuda. It's called the Bermuda Monetary Authority, in order to make sure that there's no real or perceived conflict between these things. And so how did we go about doing that? And I think it's fair to mention, even though you have not asked me to mention it, that of course we engaged with Sipple, and Vivian helped us plan out this whole process and execute this whole process. So very grateful for that. But our goals were to try to establish this constructive dialogue with the public, to establish regulatory clarity and understanding both between the public and with our office about what the financial services sector does and what they need to do with personal information, better understanding of how they're structured. In Bermuda, there are these specialized financial services corporate structures called captive insurance companies. And so we need to understand, what does that mean? How does that affect the interactions between entities, third-party sharing, things like that, understanding what that means for the industry. And most of all, helping them to understand what our compliance expectations are. Again, I don't want to leave them guessing about what we as the regulators would like for them to do. So how did we go about doing that? We started nearly a year before the act came into effect. So back in March, or excuse me, it was March 2023 that we started it. So it was well in advance. So we issued out a letter that solicited basically feedback, saying what are these areas of concern, what are the information gaps, and we invited stakeholders to a meeting. Sorry, and my memory is catching me up here. It was 2024, so it was 9 months in advance of the act coming into effect. And so we heard back again on these issues we were talking about the corporate structures. There was a lot of confusion about what that means and how we disentangle different types of financial entities, how they use personal information in Bermuda if they don't physically operate in Bermuda, how information is transferred to overseas third parties. Again, being a relatively small finance center, physically small, I mean, it's very difficult not to have an overseas transfer anytime you're engaging with a third party. So that was a topic we especially needed to pay attention to. And then we were able to have some follow-up conversations with specific entities in order to have deeper dives into operations and understanding how these issues would play out. So we worked on the report over the course of approximately a year, and it came out a few months ago. And so what were our high-level outcomes of this consultation process? So very happily, we were able to report that there are no showstoppers in our data protection law itself. And I think that's a testament to the drafting of PIPA and to, I got to give credit to the government of Bermuda, ensuring that it was able to effectively facilitate the financial services sector. Because in many cases, there are showstoppers. There are ambiguities or even direct conflicts in laws when it comes to the ability to use some types of personal information, what things are classified as sensitive, for example. The purposes for which the information may be used in order to satisfy the regulatory obligations of the financial institutions, and even the sharing of data within the organization or between organizations. And so highlighting a few specific sections, and this may only be relevant to those folks who have an interest in Bermuda, but basically to say that Section 6 is our conditions for using personal information. This is analogous to the GDPR lawful bases. We were able to say there are conditions that you can point to. And here it was really useful for us to kind of go through the analysis for the regulated entities. And we could say, okay, if you are intending to use personal information for the purposes of financial services compliance, here is the condition of use you can select. Either there is a law that requires you to use the personal information, so that's your grounds for using it. Perhaps there is a public policy question that's involved, which is a separate grounds under PIPA. But we were able to walk them through and help them understand, okay, here's how you would actually play that out in process. Here's how you could explain it in your privacy notices, et cetera. We were able to look at the categories of sensitive personal information and explain how that analysis plays out and when it is permitted and why it is permitted under PIPA, as we call it. Transferring personal information to an overseas third party, how to conduct that analysis, how to engage with them. These are things that will be very familiar to the data protection community, things like conducting analysis to see that the recipient's laws are comparable, as we call them in Bermuda, et cetera. And also the question of general exemptions. So there are exemptions for the question of financial services regulation, which allows our regulators to act in a way that does not conflict with the data protection law. And there are also some specific exemptions that prove really useful when you get into kind of take a deep dive into these insurance matters. So you can say, to give an example, that if an individual is a beneficiary, obtains some financial benefit from an insurance policy, then they are deemed to have consented to the use of their personal information, for example. So there's some provisions like that in PIPA that help clarify things in a way that makes it much smoother for the financial services industry. So I could probably take up the whole hour, but I'll stop there and pass things back to you, Vivian, because I know we've got a great panel of folks I'd like to hear from as well.
Thanks very much, Alex. And that's a really excellent overview. Just a couple of things I wanted to draw out there. You were in the unique situation of having the opportunity to consult before the legislation went live. Having participated in some of those meetings, I think one of the things that struck me was actually there was an awful lot of discussion. It wasn't exactly an easy ride in the sense of, oh, don't worry, there's nothing to worry about. It was actually a number of organizations were reading the privacy legislation in a way which they felt created challenges. And that was really interesting to see how the words and the understanding funding differed. And particularly when it came to those corporate structures, because they're quite unique when you're talking about captive insurance providers, when you're talking about beneficiaries, when you're talking about different tierings within the chain of insurance. And of course, all of it involves international transfers as well. But the point that I think that resonated and was absolutely clear was that that the data protection obligations apply. In terms of confidentiality, in terms of security, in terms of the legal basis for processing, all of that absolutely continues to apply. And what was really interesting, I thought, was when we spoke to the Bermuda Monetary Authority, was how seriously they were taking the privacy legislation and how they were able to share I suppose the actions that they were taking to be compliant themselves. And that was for me quite an insightful moment. It was like, wow, you're treating this almost as if you're one of the private sector organizations. You have someone appointed who's responsible for privacy. You've thought about how you're processing data as a regulator, and these are the measures that you're taking. And that speaks to that holistic approach of the Bermudan regulation. And so I think that was really interesting. And it was great that the exercise was able then to address the misunderstandings or the lack of clarity out there in terms of how the privacy legislation applies, so that actually everyone was able to now comply with, or at least they understand what their obligations are. They're clear on what that is. So I thought that was, for me, those were a couple of takeaways as well.
Yeah. If I could add to that, Vivian, just a commentary. A lot of people think that financial services, or excuse me, finance centers are kind of the Wild West, anything goes type of thing. But the reality is that people take issues of compliance deadly seriously. And so what it leads to is almost, I would say, an overcompensation of saying, okay, we're going even further to show that we're meeting the standards that you need. So it was really heartening to see how seriously the industry was taking the regulatory compliance obligations and how interested they were in making this work.
Thank you. And I think I'll pick this up when we speak to the UK about how often that overly conservative approach can have a bit of a chilling effect and can stop organizations from doing reasonable and proportionate things because they're over interpreting some of the requirements, as the case may be. But before we come to the UK, thank you very much, Alex, for sharing that. And for everyone online, there will be a link to both the Privacy Commissioner for Bermuda's website and that guidance. It is about 75 pages long, but it's pretty comprehensive, and you can have a read of it there. So thank you very much, Alex. Laurie, I wonder if I could come to you next. So the DIFC brought into effect its privacy legislation some time ago, but one of the things that differentiates the approach that you're following in terms of the privacy regulator and the financial services regulator is DIFC was purposely set up as a financial services center, and the privacy legislation was set up at more or less the same time. But talk us through what you're doing there in terms of, I'm going to phrase it as growing together. So, that you didn't have that opportunity to do any sort of extraordinary comparison beforehand or to plan any of this. You've moved into the role, and the two regulators have had to learn to work together. And you're finding that opportunity, particularly in relation to new and evolving areas of regulation and using of technology. Could you share with us what that looks like and some of those key projects where you've been collaborating together?
Yeah, so absolutely. And I also want to extend my thanks for the invitation and the opportunity to go through our experience so far. And there's a lot of what Alex said that resonates. But I'll start sort of from the beginning and try to give a quick high-level overview of where we were and where we are today. So in 2004, and mind you, that's only 9 years after the European directive was enacted and only 6 years after the UK data protection law enacting, or I guess implementing the directive came into effect, DIFC was established as a free zone. So in the UAE, for foreign direct investment purposes and other sort of economic drivers, the government established by law that you could have, well, Dubai, the Emirate of Dubai and the Emirate of Abu Dhabi could set up these financial centers. Dubai went first. DIFC was established by a Dubai law called our founding law. It's enacted all of our sort of corporation souls and individual capacities as well in terms of commissioners and registrars and so on, in terms of how licensing works and what the role of the courts are and everything like that. And then the DFSA, which was the Dubai Financial Services Authority, and the DIC authority, which is where I sit, which is the overall licensing authority. And interestingly, in 2004 was the first data protection law in the DIFC administered by the Dubai Financial Services Authority. So for the first 3 years of its existence, the Dubai or International Financial Center Data Protection Law, it was not the longest law in the world. It wasn't, multiple pages or several, articles, but it was a data protection law nevertheless. And it was administered by our Financial Services Authority, as I said. And then in 2007, it was updated and given commissioners powers. So it became more like the European law, or even more like the European law that we were seeing in the directives still at the time. But we then evolved in 2020 after the implementation of the GDPR to see what we could do to further align with those data protection objectives that were sort of updated, applying processor obligations, having a bit more of alignment with breach notification. And certainly we also created some of our own bits in the data protection law that we thought would really resonate with the financial services aspect of what we do here, right? So the Data Protection Commissioner sits in the authority. The DFSA still exists as the Financial Services Authority, and we work very closely with respect to administering their regulatory law, our data protection law, and something that I didn't mention was that in establishing those free zones, we do have our own laws and regulations. Apart from the UAE Sharia law, we have common law in the DIFC. So we work together very much the way, for example, the ICO and the FCA might work together. But we are right next door to each other, where we work together very, very closely, hand in hand, and particularly so because in 20, I guess 20 around 15 or 16, FATF, the Financial Action Task Force, started its review of the UAE, a national review. That we were very, very integral in terms of leading the other jurisdictions within the UAE. So the other Emirates, the other free zones, including even Abu Dhabi, and sort of saying, here's the experience that we've had so far in establishing a really robust financial services regulator and ensuring that AML, financial crime in general, and so on was really well regulated through a detailed rule book that if you know anything about the FSA, the DFSA actually, many of the people that were in at the time the FSA in the UK came over to establish the Dubai authority in our jurisdiction. So they brought that experience, they brought that really robust UK experience and applied it in the DIFC. At the same time, we had the development of the data protection law. I joined in 2018, and we had our commissioner obviously in place before that to work really closely with them in implementing our requirements around AML vis-a-vis privacy, if that makes sense. So like you said, Vivian, we kind of grew up together in a way over the last, I guess, 8 years or so, through the FATF mutual evaluation assessment, through the NRA that came out of that, the National Risk assessment and recommendations. And not only did the DFSA, again, as I said, serve as a sort of bastion for the UAE in that regard, and helping to demonstrate all the good work that had been done, but we were sitting in the spotlight as well as the authority for having established a non-financial services AML assessment. So noting that even though they weren't entities that were authorized by the DFSA, that there would be holding companies, special purpose vehicles, that there would be foundations, family wealth centers, and so on, even retail entities that were being set up that had to be evaluated from an AML perspective. And I'm also the director of data protection, but I'm also the regulatory compliance director. And so I was tasked with developing that together, right? So had to bring into the non-financial services AML assessment, the data protection aspect as well. And this all comes back to the development of our law in 2020 and the items that I mentioned earlier as being some of our own sort of brand kind of developments, including, for example, Article 28 on data sharing. So on government data sharing, I should say, we developed Article 28 so that it wouldn't inhibit government data sharing for the purposes of financial crime prevention, but that it would build in specific safeguards and require even written assurances from government authorities that in making requests for example, financial crime prevention, that our specific controls in our law would be applied, and that only necessary and proportionate requests would be entertained. And obviously, if there's some sort of court order or some other, instrument that would supersede that kind of work, I guess, or request, then we would have to honor that, obviously, and the organizations in DIFC would have to honor that. But we would
So the
really
principles
be,
piece is working really
yeah,
well. So you've got the two,
right,
I mean, the two regular, you geographically sit next to each other,
yeah,
and then actually you've been evolving this together.
yeah,
We talked about this a while ago as well, was just in relation to company registrations and so
yes,
on, and information sharing and using new
yep,
technology. So having sort of things have evolved between the two regulators, and you've done that
yep,
in
yep,
tandem as opposed to independently. But could you give us a specific example of that company registration piece? Because I think that's
yeah.
quite useful.
Right. So I'm coming on to that in terms of the non-financial services AML piece. We developed an entire risk assessment model that basically says, based on a variety of factors, including distribution channels, UBO, nationality and background, criminal records checks. We do passport checks. We have a number of criteria that go into our risk assessment that, above and beyond the financial services aspect of the DFSA and what they regulate, we also look at a number of other factors that then, when we bring a company on board, it goes to evaluation of low, medium, and high risk for financial crime. Basically, if a company is at high risk, that means effectively they're maybe have UBOs that are on a sanctions list, or they or maybe a very high risk list in terms of Transparency International or Basel III, for example, index there. And so when we do come across a high risk organization, it goes to a risk evaluation committee, who then decides whether or not they can go ahead and register in the DIFC. We don't often fully exclude a company from registering the DIFC, but we do increase monitoring, and we've got a lot of really good, as you say, technology in place to be able to engage in automated, but with human intervention, but automated review of those companies to make sure that monitoring is always happening. We do ongoing, never-ending passport update checks or any sort of additional adverse media checks. We have a robust investigation and inspection program that, again, is automated through our portal. We do on-site inspections as well. And that's just from a purely non-financial services perspective. That's not even getting to what the DFSA does. And the DFSA, again, works very closely hand in hand with us on the actual privacy and security implementation as well, required in their rulebook. So it's been quite an interesting journey. We definitely are growing up together, and within our own non-financial services side of things, we've really implemented a quite robust AML assessment tool that also takes into account privacy risks as well.
So it's fantastic. You've not shied away from the sensitive data piece. Ultimate beneficial ownership has had a sort of a checkered approach across different jurisdictions around how much you can do, who can access those registers, and of course when you're doing passport checks, that does include the processing of sensitive personal data. So it's really great to see that sort of cooperation and collaboration between the two. So thank you.
And one just really quick interesting thing as well, in terms of UBO register, we don't have that posted on our website. We do have a public register, but for privacy purposes, we keep our UBO, quote unquote, UBO register in what we call the vault, which means that the data is there, but it's not connected. Names are not connected with companies or what have you. It's only sort of reassembled through, it's basically blockchain, if 3 keys are turned at the same time virtually, and then we can produce UBO data connected to the company. But we absolutely do not publish that. We have resisted publishing a UBO register in terms of, kind of what international practice has been, and that's basically for our privacy concerns with respect to our UBOs. We can produce it, but we don't publish it on a public register.
Who do you produce it for?
We can produce it for regulators. We can produce it specifically for if there's a criminal investigation. There is a carve out for that, for what we call. Yeah, for AML and what we call, so even for example, if the central bank contacts us or the SEC or the FCA or what have you, even the DFSA. So that's how we protect our data in our UBO sort of register.
Okay, thank you. That's really, really helpful. Just conscious of time. So Stephen, I'm going to come to you because in the UK, we've got this unique arrangement, the Digital Regulators Cooperation Forum, of which both the ICO, the FCA, Ofcom, and the CMA are in it together. But you've just recently published some guidance on your website in conjunction with the FCA and so on. Could you just tell us a little bit about the approach of the UK ICO and the FCA and what that's looking like today?
Thank you so much. Look, thanks for having me. Thanks for acceding to my request to bring a friend along as well. I thought the best way for us to demonstrate collaboration in practice was for the ICO and the FCA to be here together. So I'm delighted to be joined by my good friend Ed Smith, who will talk things through from the FCA side of things. Ultimately, our regimes are trying to achieve very similar things. From my perspective, if you as a consumer don't trust a financial services provider with your personal information, how are you going to trust them with your money? Right? And that foundation of consumer trust is an anchor for both regimes. And it's a real enabler, and I'll make the case for this, of innovation. Ultimately, sustainable, responsible innovation in this space is going to be anchored, it's going to be built on that foundation of trust. So in terms of our work in this area, it's absolutely crucial, therefore, that the ICO and the FCA work hand in hand and in everything that we do that has an intersection. And so our areas of cooperation are actually many and varied, and I will just drop into the chat a link to a recent summary of some of the work that we've been doing together, just that folks can see how broad that is. But it ranges from thinking through some of the really knotty challenges in terms of, right, okay, if you're going to achieve some of the goals of financial services regulation in the UK, including, for those of you in the know, the consumer duty, there are valid questions that arise around, well, actually, what does that mean in terms of the amount of personal information I need to gather about people to carry out those sorts of regulatory requirements? Does that mean that I can, for example, reach out to consumers and tell them about great new savings rates, where I'm trying to do that for regulatory purposes, even if people have opted out before? One of the things we've been really keen to try and get across together, and we've had some great impact in this, is actually that data protection doesn't prevent you from doing things which are essentially to comply with the requirements of financial services regulation. So we've acted jointly together in ways which have helped savers access better interest rates by unlocking communications to them. We've repeated the same trick again in relation to pensions, in relation to investments. And we're continually challenging ourselves to try and find those areas of perceived friction. And I would really stress the word perceived there, friction between our regimes, to be able to give organizations clarity and, frankly, to also sometimes tell them there's no excuse for complying with the requirements of both regimes. And so we'll continue to do that in areas like data minimization. For example, we're considering how we can help organizations get it right in terms of understanding, well, how much data can I gather in order to protect consumers? And the answer actually typically is, as long as you've got a valid reason for doing so, you can go quite far in this space. You've touched already, Vivian, on the area of intersection around emerging technologies, and that is an area which is really, really growing. I mean, first up, and we could have a whole conference on this alone, is the uptick in use of AI in financial services. It is growing, could grow, frankly, even further and faster. And we're working together really closely to unlock those opportunities, whether it's around thinking around AI in credit risk scoring, for example. But of course, lots of those create interesting questions. Well, actually, how does automated decision-making requirements apply in this sort of context? So we at the ICO are gearing up to provide fresh guidance on automated decision-making following the passage of new legislation in the UK on exactly how that can be done. And we'll be working really closely with the FCA on those use cases that come up in financial services. We know that people are asking questions around, well, okay, what's my respective liability and accountability across the AI supply chain? And we see those questions come up a lot in the context of financial services. We put out at the ICO fresh guidance at the end of last year around how to allocate liability across the supply chain, and we're working really closely with the FCA to target that and make sure that that is accessible to banks and to other players across FS. But our interest doesn't just stop at AI. We're also looking at, well, how do we join up in terms of other areas of emerging technology? What about digital ID, for example? Well, we're hosting a joint symposium later this year to set out some of our emerging thinking in that area. We're also learning the lessons from open banking, from increasing competition within the FS sector in the UK, which has had a lot of privacy implications in terms of,
well, it's all about data sharing, isn't it?
It is all about data sharing. How do you make that happen securely in a way that consumers trust? Actually, it should be a real engine for privacy. It should be an engine for people to exercise their rights and exert more control over their personal information, working really closely to try and, yes, leverage the success of that and see it roll out into other domains. Also working closely, we've done joint research in areas like digital assets. And in that space, I can let folk on this call know that the ICO will, in the next month or so, be setting out its very first guidance on blockchain. So all of these areas of intersection we're working so closely on. But it doesn't just happen at a policy level. It's also when people come to us with queries. So one of our particular strengths, I think, in terms of collaboration has been around our innovation services. At the ICO, for example, we have our innovation advice service, our regulatory sandbox. But increasingly, actually, we've been working across boundaries with the FCA. So where the FCA has set up its own services, we've been ready to provide advice behind the scenes around some of the data protection implications. And I'm sure Ed will touch on this, working most recently jointly through the DRCF AI and Digital Hub, which has been providing over the last year a pilot service of joined up regulatory advice, where we've had some really interesting case studies that have crossed our boundaries. So from us, I think, yes, you know, we haven't necessarily had the same journey that, say, Laurie has in terms of being set up at exactly the same time. But ultimately, both kind of in terms of our commitment from ourselves and from our leadership here, we have a genuine commitment to work together across all of these areas of intersection, provide that regulatory clarity and coherence and certainty for organisations. I'm really looking forward to the conversation today to identify, well, actually, where are the other areas that we should be moving into.
Super. Thank you so much. As you're putting together that guidance on blockchain, I'll resend you the paper we did a couple of years ago at SIPL on privacy and blockchain, and where we see some of those challenges given the existing concepts in the privacy legislation, and of course how blockchain changes our existing systems and processes on its head. The architecture of blockchain is so fundamentally different that it's a different way of processing altogether. So a lot of what we have in our privacy legislation can be a bit challenging. So looking forward to that, and I'll share that with you. I'm sure if Malachi, maybe if you can pop that in the chat as well, then others can have a quick read of that paper. Ed, I'm going to come to you next, and if you could also just have a chat to us about some of the areas that why you think it's important to be collaborating with the privacy regulator, and some of the areas that you're seeing that. I think when we had a chat before, it'd be great if you could mention what's going on in terms of the consumer duty. A lot of financial firms have been very concerned about consumer duty, feeling that, oh my goodness, we now have a requirement to collect more information on our customers. And a lot of it is about vulnerability of customers as well. And of course, that gives lots of triggers around, so how do we do that and be respectful of privacy legislation? How far can we go? What are the expectations in that space? And then the other piece really, I think, is around sort of the crypto blockchain piece. And the last thing I'd love you to comment on actually is the sandboxes approach, because I think the UK has been recognised as a bit of a leader in terms of sandboxes, where we've got 2 or more regulators coming together to actually test things out in an environment where firms can share what they're doing, even if it's not perfect yet, and then take it away and make it better once they've had the feedback from the regulators, which requires an awful lot of trust on both sides. So I would love to hear from you, Ed.
Okay, well, thank you very much. Thank you to Stephen. I mean, I totally endorse what Stephen says. I mean, as regulators, I think we're joined at the hip with ICO. I've probably seen Stephen more than I've seen my boss over the last month, one way or another. But I think for the FCA, regulatory coherence is a really important objective, and that's why we joined the DRCF back in 2021. Because I mean, there are different models of digital regulatory cooperation, and I think we're quite unique in having the financial services regulator involved in that as well. And we wanted to join primarily because we really understood that lots of financial services regulation really is at the interface with other pieces of regulation, be it privacy regulation or be it communications or competition regulation. So DRCF was a no-brainer for us in that sense. And in terms of the way that it's developed, I mean, I think our relationship, our touch points with the DRCF are many, with DRCF and with the ICO. It probably started, like Laurie was explaining, mostly in the financial crime space, AML regulation, KYC, know your customer, and the sort of privacy considerations around that. And particularly in areas like fraud and scams, where banks are working or doing a lot of work to try and prevent and identify fraud, and obviously that has significant data implications or personal data implications as well. So I would say that was the sort of the mainstay of a lot of cooperation before DRCF. But actually, since then, I think that's ballooned in many different areas. And you mentioned the consumer duty. So the consumer duty is a piece of regulation that came in 3 years ago now, I think. And what it does is really put the onus on financial services firms to create good consumer outcomes and to understand customers, the customers they're selling to, understand their needs, and really ensure that those outcomes that customers get are good outcomes. And if they're not going to be, then to foresee that, right, and try and communicate them, make sure they understand and support them in ways that can help them. So a lot of that is about data. A lot of it is about financial services firms understanding the outcomes that their customers are getting, understanding how they're using their products, understanding what their challenges are in engaging with financial services. And obviously that does require firms to process quite a lot of personal data in order to do that, or at least that could be the case. And one of those examples, Vivian, you mentioned is in the area of vulnerability and vulnerable customers, where there are particular responsibilities on the firm to identify vulnerable customers and ensure that they are getting good outcomes in their financial services and support them in ways that promote that. So obviously there are strong privacy considerations in that space, and Stephen mentions the data minimization considerations. So firms have come to us to say, well, in terms of developing, using and processing customer data, how does that comply with data minimization under the consumer duty? And there are a number of areas where we have explored that. In particular, Stephen mentioned the savings data. So we did a piece of work on customers who are essentially getting quite low interest rates in their savings accounts, and how firms can communicate with them, issue correspondence that is compliant with the GDPR, but nevertheless identifies those customers that might be getting a poor deal or vulnerable customers in poor savings rates, and allows them to correspond with them in ways that encourages them to switch to better products. So that sort of consumer support, consumer protection objective has been really important, that we work closely with Stephen. Again, as Stephen mentioned, we've recently done a piece in the pensions, which is similar in terms of how can we communicate effectively with customers to really engage them in their pensions. And some of that might need processing of personal data to do that, to ensure that they communicate or effectively and get customers to respond. So, I mean, those are really important ways that the consumer duty and the privacy regulation sort of overlap and interface, and that's really important. Stephen mentioned the innovation. I think that's really exploded over the last couple of years for us. So we have a sandbox. We have a regular innovation hub where firms can come in and seek guidance, and ICO colleagues have always been very present in that. So they participate at many different levels in our innovation services. We have developed 2 sandboxes. One is a regulatory sandbox where we try to give firms, we try to create spaces where firms can experiment with data. And quite often that's synthetic data that we try to develop and allow firms to use that. Now, obviously, that will be based on personal data, which is being anonymized and is compliant. And I think the ICO have really helped us to think about ways that we can develop that kind of synthetic data, and firms can use it and develop it in the sandbox. We've recently announced an AI sandbox. Again, the ICO will be very strongly involved in that, where, again, we've developed some synthetic data. We've got NVIDIA coming in to support in terms of computing power. But again, the idea is that firms can experiment with their models either with synthetic data, or if the case allows, to use real data in some circumstances as well. So again, having the ICO involved in that is really important for them to develop that trust, and for us to understand really, I think, how these models develop and what the risks are around them. So that's all really important. I mean, just as a final example, and the reason Stephen and I have been so joined at the hip in the last couple of weeks is our CEOs had a round table a couple of weeks back, looking at really what the barriers to AI adoption are for financial services firms. And in a recent survey we did, there was 30-odd-5% said financial services regulation is a barrier, consumer duty is a barrier, and then similar number said privacy regulation was a barrier. And as Stephen says, I think a lot of that is perceived and not real. And that was kind of brought out in the roundtable that we had, where we really challenged firms to sort of come up with, well, what are the specifics? What are the specific issues you're encountering in developing AI tools? What are the specific constraints in terms of regulation? And again, there's some general things that came out, really interesting things that we can take forward, but actually the specifics are sometimes not quite as specific as you want them to be. But if firms can come forward with specific problems, I think Stephen and I are very, very willing to help them and to apply our brains to what the solution might be. So yeah, there's a strong desire to enable innovation in a sort of safe and responsible way, and in a way that engenders trust between consumers.
Thank you very much. And it's really good to see that it isn't just two regulators that fall through the DRCF. So basically, we've moved from established regulatory areas of challenge in terms of regulation, so AML, KYC piece, where we're thinking about sensitive data and criminal data and so on and so forth, to moving forward. I think it is almost easier to deal with new and evolving areas. So everything to do with consumer duty, blockchain, AI, government initiatives around pensions and savings. Those are new things. So it's an opportunity for all regulators to cooperate together because it's fresh to both. But we've got a question also about some of the more traditional, or the long-standing issues in our question. So before I get to that, just for everybody, we've got 15 minutes left. So please put your questions in the Q&A, and I will raise them with our panel. But we've got a couple in there already. So I'm going to ask you, Ed and Stephen, if you wouldn't mind to answer this particular question from Steve Wood, which is, it would be great to hear a little bit more about how the financial services and data privacy regulators practically handle data breach notifications, and also the potential risks of double jeopardy for companies. So basically, is there a double fining with double penalties that appear? So some of those practical issues, because what we do see is a lot of companies are overly cautious. They report to everybody under the sun, and there's a real concern about how does this work out in practice.
I'm happy to start on that, and then Eddie, please do come in. Look, I'm afraid, and hello, Steve, formerly of the ICO. I don't believe in such a thing as double jeopardy here. Sometimes you have rules under different regulatory regimes where the actions of a firm could have consequences under both those regulatory regimes, and it's for good reason. The fact that you might face sanction under both regimes for something that is not compliant under both regimes, frankly, is the price of operating in that space. So I don't believe that one regulator should simply get out of the way here. And of course, data breaches are a perfect example of this, in as much as data breaches, yes, can be involving personal data and can be involving financial services data. And so you do get that area of intersection, but there's also parts of that Venn diagram that do not intersect. And it is really important that both of those parts are are covered off. So yes, of course, you should and can expect that the ICO and the FCA work together very closely in the area of cybersecurity, as we do with other competent authorities where cyber breaches draw in other areas of responsibility here. But you should expect, of course, that as a firm that is operating both in the space of financial services and in with personal data, which is not going to be true of everybody in financial services, that if you are in scope of both regions, you're going to have to meet both sets of requirements. And we're not going to be too apologetic around that.
Well, that was a feisty response. Thank you very much, Stephen. Ed, is there anything you wanted to add?
No, I mean, I think Stephen's captured it really well. I mean, we will obviously have requirements on firms in terms of their systems and controls and their governance across the piece. And clearly, if a data breach exposes more general, mismanagement or governance inadequacies, then it's absolutely right that we deal with that as well as part of our regime, I think, in some ways. But I think the thing to say would be that we would cooperate hand in glove with the ICO if that circumstance arises.
Fantastic. So you would actually discuss potential quantum of fines and so on and so forth, and come up with what would be reasonable proportion from each side, potentially.
I suspect so.
Yeah. Depending on the case and the nature of a breach, of course, we'll contact.
Okay, terrific. Thank you. I have a question, actually, Alex. I'm going to bring this one to you if you don't mind. Obviously, Bermuda is very close to the US, a huge US impact there, as well as from the UK. And what we're seeing is, a long-running anticipation of potential privacy legislation in the US, which perhaps a little bit slower now in progress. But are there any lessons learned that we could share with our colleagues in the US around what we've learned today about what good regulatory cooperation looks like? So that's a jurisdiction which has potentially, well, it has state privacy laws and then potentially a federal privacy legislation as well. Are there any learnings that you think you derive from your experience in Bermuda and hearing from others today that perhaps our colleagues in the US might be able to benefit from?
Yeah, well, without commenting directly on the legislative developments in the US, I would say in general, any legislature would be prudent to think carefully through what they're trying to accomplish in the first place. And I think that the framing that we've had in this conversation is incredibly important. So talking about trust and the idea of consumer trust, what are we really trying to accomplish there? The idea of promoting innovation and how clear rules can help promote innovation. I will often say that putting boundaries around something can actually spur creativity because you're challenging someone to think about things in a different way and not simply throw all the paint at the wall. You're making them draw within the lines a little bit and making them come up with new ideas of doing things. I love the example of the jazz pianist Keith Jarrett, who was doing a concert in Berlin, I believe it was, and he arrived and the piano was broken, and several of the keys were not working, and so he had to figure out either to cancel the conference or cancel the event, or to go ahead and try to work around the broken keys. And it ended up being called one of his most amazing performances, because he was able to come at things in a slightly different direction, and he was forced to think about things in a way that he hadn't before. So I would also challenge that the idea that restrictions or regulations could harm innovation. I think they actually help innovation. So thinking about it in that way, thinking about, okay, what is it we're trying to accomplish? Understanding the reality of how the industries work. Quite often regulations are made in the abstract, and then it's the regulated entity that's told to go figure out how to actually do it. Those two things may be entirely divorced from one another. And so I think it's really important to take those perspectives into consideration. So those are a few elements I would encourage any legislator to consider.
Super. I think I'd add to that is actually the recognition that there are multiple regulators and the joined up approach, that regulatory coherence, which is sort of the underlying theme of today, is so very important. So as and when a legislation evolves in a jurisdiction, is make sure that it actually fits in and has the ability to, and those regulators have the ability to work together, because otherwise you just create silos that create real challenges for business compliance. What we don't want is business non-compliance. What we want is certainty so that organizations can comply, and they're not going to do so in an overly cautious way. We've got a couple of other questions here. One is, through the lens of know your vendor, what are the primary risks and challenges that companies face regarding data privacy and security when procuring third-party AI systems that operate as AI agents in the financial services sector? I mean, that's a really loaded question. AI agents is pretty big, but I think it does go to that sort of liability in AI and privacy. And I think that might be something you could comment on, and then I'd love to open that up. I think, Laura, you've got something to say about that as well.
Oh, yeah.
Yeah, I mean, under financial services regulation in the UK, the regulatory responsibility for third-party vendors sits very clearly with the financial services firm. And there's a whole source book of rules around how firms need to manage that relationship to ensure compliance with financial services rules. So that sort of regulatory liability is pretty clear, and we have the senior managers regime, which establishes accountability for senior managers within financial services firms to ensure that various things run. And one of those accountabilities is around third-party suppliers. Another one will be around covering AI and data and those kinds of things as well. So that's in that sense pretty clear. Where I think there are going to be difficulties, firstly in terms of commercial liability. So one of the things that came up in the roundtable I was just talking about with our CEOs was less around regulatory liability and actually more around commercial liability. So who has the commercial liability in the sort of the supply chain when you're talking about AI models that might be a mix or blend of a third-party provider and a financial services firm's data. And if something's wrong with that, there's hallucinations or the data's not robust, then kind of who takes the liability? I think there's open sort of commercial law questions probably around that. I don't know, I'm no commercial lawyer. But in terms of the regulatory control, I mean, there is an interesting issue, I think, when you have these very big third-party providers of say LLM models or Gen AI type products, where there's perhaps it's more of a asymmetric relationship between the financial services firm and the third-party provider, and perhaps it's quite difficult for the financial services firm to negotiate particular provisions within their commercial relationship to ensure regulatory compliance. So I think there is an interesting question, I think, around that's worth thinking about.
Before I hand over to Laurie, so I was going to just say that's the operational risk piece, which I think from a legislative perspective we're addressing, which is really important. Spot on well, I mean, you're the regulator, aren't you? But remembering that you can't outsource your regulatory responsibilities and your liability, that just sits in there. And obviously that good point about commercial liability, remember to separate these things out into their appropriate areas, and you can do what you like on the commercial side. And if you don't have the the ability to negotiate, then that kind of starts to set under operational risk. So I think those answers to all of this. Sorry, Laurie, I leapt in just as you were about
no,
to
you're
start.
fine. No, that's okay. I just want to add to that. I echo a lot of what Ed said, but also in terms of the know your vendor part, one of the things that certification maybe could help with is this exact piece. What we've done in DIFC is we enacted regulations regarding the processing of personal data through AI systems for this reason, so that we could say, whether it's an AI agent or a vendor that deals with financial services related data specifically, a lot of sensitive data getting processed in these systems for, like we said before, criminal records checks and all sorts of other things that come up through financial crime prevention and risk assessment. We require that if for commercial purposes and in high risk processing situations, somebody is using that kind of system, whether they're the vendor or whether they're procuring from a vendor, the system has to be certified. And that is to help thoroughly know your vendor, right? You can say, I've got a certification. I can demonstrate that I've built in privacy by design into this AI agent or the system, and the vendor has done everything they can to comply with a variety of frameworks. It could be anywhere, and our law says it could be from anywhere. We've followed the model, for example, that's been established in Singapore with MAS and IMDA working together on AI Verify and that sort of thing. We've looked at what's going on in terms of best practices, even out of Europe and so on. But we primarily wanted to be sure that in terms of that exact problem, know your vendor, that a certification can serve to help kind of secure the system that you're purchasing or that you're implementing in your organization. And we have one of our banks here in DIFC, Standard Chartered Bank, is one of the leaders in that space. They brought over a lot of that information from what they learned in Singapore. The head of responsible AI and data ethics here now in Dubai has worked very, very closely with us on establishing exactly this protocol within Regulation 10.
Okay, so I'm just conscious of time. We've only got a couple of minutes left. Stephen, you have your hand up, and then I have one question for everybody.
Thank you so much. Look, just to also interject around and this one, this is an interesting example of where on the privacy side, some of the allocation of responsibility is slightly different. So of course, if you are a model developer and you are training that model based on personal information, you are going to have your own data protection obligations to comply with. And the further along the chain that we get, some of those obligations start to play out in terms of actually, for example, under data protection, we'll be talking about joint controllership, where actually, say the financial services firm is providing data back for fine tuning of the model, but the provider is going through that process of determining, well, how to use that model in order to do that fine tuning, etc. There are going to be questions here around, well, actually, are we starting to slide towards joint control relations? We have put out guidance exactly on this point. I'll drop it into the chat. There's a really great clarity from us around how that liability applies, but it's worth just highlighting that how financial services law and how data protection law might play out in terms of that allocation of liability might be different for very good reasons here in terms of the allocation of liability here. So just worth adding that in.
Thank you. Super. We only have a couple of minutes left. So my last question, and you've got to answer this in 15 seconds, is we've got fantastic examples here of collaboration within a particular country between two regulators. What is your vision for international collaboration between financial and privacy regulators across borders? Laurie, can I start with you?
Yeah, it's funny that you ask that. That's a perfect question. So Alex and our counterpart in Jersey and myself have been long, many years now, sort of having check-in calls and talking amongst ourselves about how we, in our capacity as small financially driven, I guess, centers, not specifically only that, but with a large sort of bent towards that. So we are working on collaborating. I know that there's a lot of the same going on amongst a wider group that resulted from GPA in Jersey. We're looking at building like a regulatory sandbox kind of environment as well. I know, Alex, you're involved in that too, and Bradley Tasso from Gibraltar, all of the Channel Islands and so on. So all of the kind of main financial centers around the world are starting to jump in together and see how we can collaborate. So we're having the conversations. There's not a lot of concrete sort of examples to give you right now, but we're definitely talking.
Stephen, could you comment on that cooperation, collaboration, not just within privacy, but with financial services regulators and other jurisdictions?
Of course. Look, today has been an absolutely glorious conversation, and long may it continue in terms of taking the collaboration that is already taking place very well, both at domestic and international levels. For example, for ourselves through the Global Privacy Assembly, for the FCA through the Global Financial Innovation Network that it's pioneered. And there's great opportunities for us to start to join some of these conversations up, because obviously in the balancing of some of the requirements between financial services and privacy, nobody wants to end up in a situation where everybody across the world is reaching their own determination of how to strike that balance. And actually we're leading to greater regulatory fragmentation whilst we're trying to strive for collaboration. So great to start this conversation. Looking forward to it continuing.
Thank you. And Ed, are you finding out and getting to know friends in the privacy regulatory world in different jurisdictions as well, given that the UK is a global financial services centre and certainly a centre for innovation in financial services? You're on mute.
As Stephen did, the Global Financial Innovation Network, which we helped set up, and it does look at quite a lot of privacy questions actually as part of the sort of the pioneering AI work that it's doing, and also SIPL. I mean, I think I've been to, this is my third event, I think, but it's a really interesting network and forum for discussing these issues as well.
Super, thank you. Alex, we started with you in Bermuda, and I'll give you the final word.
Well, thank you. And there have been so many great comments. I'll try not to repeat them, other than I'll just add, I think we should all recognize that there is so much more that unites us than divides us. And the trick will be not getting hung up on those small differences, but keeping in mind the vast common ground that we have. That's where we can come together, we can find common solutions that end up making life easier for the regulated entities because they have fewer complexity, but it also ends up achieving all of our ultimate goals of protecting individuals from harms, whether privacy harms or financial related harms, because we're creating consistent and achievable standards. So as long as we keep that in mind, I think it's very possible for us to collaborate not only amongst data protection authorities, but across different types of regulators.
Super. It just stands to me then, and I'm sorry we've gone a little bit over time, but to say a huge thank you actually to Alex, to Ed, to Laurie, and to Stephen for coming today. This represents a lot of the sort of work that SIPL does, which is about bringing regulators together, hearing those different perspectives, us as the private sector learning from those regulators, and also those regulators hearing from the private sector around what their concerns are, and seeing that increased regulatory coherence taking place is really fantastic. There's been areas historically where sometimes it's been quite challenging to navigate a path forward, but certainly what I've seen today is a lot of those areas of historical tension have now been addressed, and that there is an absolute appetite going forward, particularly with new innovation, new data opportunities, and new technology, to see that regulatory cooperation taking place, because that generates regulatory coherence. A coherent regulatory approach leads to clarity and leads to confidence in business being able to act appropriately, not to be afraid of the data, but to use the data responsibly to generate a real and genuine positive outcome for their customers and community in however which way that data is being used. So that regulatory coherence is absolutely essential to enable business to flourish and grow. So thank you so very much to all of our participants again here today, and to the CIPL team for putting on this excellent webinar. And we look forward to continuing this discussion, because actually this is a sampling of some amazing jurisdictions that are really figuring out how to get this done right. But there are a number of other jurisdictions that are also following down this path and are leading in their own way, not just in the context of financial services, but in other sectors that dominate in their economies as well. So thank you for sharing your insights. It's been absolutely fantastic, and enjoy the rest of the day wherever you are. Thank you.